The U.S. core PCE inflation data has just been released, and it's shaken the entire crypto market again. The figure came in higher than expected at 2.8% for February, marking the highest level since December 2024. And with that, we've seen another wave of heavy liquidations hitting the charts. Ethereum is getting hammered, currently trading at $1,883 and down almost 7%. Despite ETF approvals and the Ethereum gate controversy, the token is in a sharp decline. XRP is sitting at $2.21, down nearly 6%. The entire market is under pressure. Doge, SHIB, everything is bleeding. It's another day of full-blown correction. What's driving all this? Beyond the inflation spike, today also marks a massive options expiry for Bitcoin. Billions in contracts are set to expire, which means volatility was expected, but it's hitting harder than many predicted. Over $421 million has been liquidated in crypto in just the last 24 hours. That's a massive wave of capital flushed out of the system. Just yesterday, we were talking about $120 million in liquidations. Today, that number has tripled. Even with all this pain, there are still some key developments to keep an eye on. XRP was just listed on Interactive Brokers' crypto trading platform. Every new listing increases access and exposure for XRP, especially on large, regulated platforms. That's a positive sign. Even on a red day like today, on the other hand, Tether has just minted another $1 billion worth of USDT. And just like clockwork, this happens right as Bitcoin is tanking. Tether has a pattern, injecting liquidity whenever Bitcoin shows signs of collapse. The issue, as always, is that these mints have never been audited or transparently backed, and yet they continue to serve as emergency liquidity injections. Looking ahead, there are multiple catalysts for XRP this year. Ripple's institutional custody potential is expanding, especially after the SEC walked back the controversial SAB 121 rule. There's regulatory momentum building around stablecoins, which could benefit Ripple's stablecoin product. We also have the ongoing possibility of an XRP ETF and, most importantly, the potential inclusion of XRP in the U.S. digital reserve. And all of this is happening while the Ripple versus SEC case is finally, slowly inching toward a conclusion. At this point, the legal case feels like a formality. Most other major cases between the SEC and crypto exchanges, Crypto.com, Kraken, Consensus, Cumberland, have already been resolved. XRP is the last piece on the board, and the attention is now focused squarely on this final chapter. What we're likely seeing is a strategic delay, not indecision. The court process must be completed, but we're closer than ever. Speaking of regulation, the draft of the Securities Clarity Act was recently revealed, which states that the use of a digital token in an investment contract doesn't automatically make that token a security. This is huge. It opens the door for assets like XRP and XLM to be treated more like gold or oil rather than stocks. If passed, this would provide legal recognition and clear boundaries for crypto projects, essentially saying, you're not securities unless you behave like one. This clarity would bring real structure to the crypto space, especially for ISO 20022 compliant assets. These are the projects with real-world utility, integration potential, and regulatory positioning. These are the cryptos that could define the next financial system. Now it's your turn. What's your take on today's inflation numbers? Do you believe XRP can hold this level, or do you see more pain ahead before recovery? And what are your thoughts on this new draft law? Will it finally give crypto the recognition it deserves? Drop your thoughts in the comments, like if this breakdown helped you make sense of today's chaos. And make sure you're subscribed so you don't miss the next big shift. See you in the next update.